Before we start getting into analysing the 10 stocks you've asked us to take a look at, I choose a stock of the day, something that's been in the news. Thought we'd take a look at Service Stream. Doesn't come up too often here on the call. I like to look at stocks that don't appear too much in the list because there's just so much choice on the markets at the moment. Service Stream has agreed this morning on a $310 million deal to acquire Lend-Lease's services business, with the deal to be funded through existing debt and proceeds from a $185 million equity raise. Global Lend-Lease Chief Executive Tony Lombardo says the divestment allows Lend-Lease to focus on its competitive edge. Andrew Page, what does it mean for Service Stream?
Look, I'll confess, it's not a company I'm intimately familiar with. It's one that, when you look at the history of it, it's had this actually pretty decent history until very recently, and I believe that's due to some loss of some contracts associated with the NBN. And this is a reflection of what you need to be aware of with service-oriented businesses. You know, it's great when the contracts are coming in and there's lots of work, but you need to replace them. And when they're lost, you can have the rug pulled out from underneath you. So I haven't had time to digest this deal. You know, they're talking it up as they would. I hope that it can do something for their earnings, because I had a quick squiz at the forecasts, and prior to today, the analysts on consensus are calling for something like a 7-cent earnings per share figure for 2022. That contrasts with 14 cents for 2020. So that's a bit of a hole there that they need to fill, and you can see that reflected on the share price chart. So let's see if that can reinvigorate interest in the stock.
Yeah, Michael Wayne, it seems as though, you know, there are a lot of these companies who were connected with the rollout of the NBN. The NBN rollouts basically come to an end. The major portion of it, it's basically maintenance of the system at the moment. Is this a consolidation in that industry?
Look, I think so. I mean, Service Stream has done it now. I think this is probably their second sizable acquisition in the last sort of 12 months or so. They're looking to diversify their earnings stream and reduce their reliance on the NBN. As you point out rightly, during the roll-up, it's all great. They're building more and more poles and wires, and the maintenance required in doing that keeps increasing. But as these things are built, it just turns to the maintenance side of things, which basically puts a handbrake on that revenue growth. And I mean, if you look at Service Stream, I think their revenues last financial year dropped by about 20% or so. So even if you're a business with the most unbelievable margins in the world, that sizable drop in revenue is going to cause you issues. So the company and the management are trying to do the right thing. They're trying to diversify the companies that they deal with and get different sources of revenue coming in the door. The reality is Service Stream did have a pretty clean balance sheet, which has allowed them to go out and do these acquisitions. But if you're looking to pick it up, I'll be waiting to see how this diversification phase goes before jumping into it, because you want to get some confidence that the lost revenue from the NBN projects are going to be made up elsewhere. And at this point of time, I don't think you have that clarity. So it's a business going through a transitionary stage, and there are definitely a few risks on the horizon. And I think without doubt that the heady days of a few years ago are unlikely to be replicated ever again, probably, or at least in the foreseeable future. Sure. So it's a no for me for that reason.